On June 23rd, Schwab quietly announced SCHD's Q2 2026 dividend. Most estimates going into that day were calling for around 26 cents a share. What actually showed up? $0.2525. Lower than expected, lower than last quarter, lower than this exact same quarter 1 year ago. Second quarter in a row that happened. If you own SCHD, that number hit your account on June 29th. And if you felt a small gut punch checking your brokerage app that day, I want you to stick around because what I'm about to show you changes how you should feel about it completely. Before we go further, this video is for educational purposes only. I am not a licensed financial advisor. All data is from publicly available sources as of late June 2026. Please verify current numbers yourself and consult a qualified professional for your own situation. Let's start with the exact numbers so we are all looking at the same thing. Q1 2026 paid $0.2569 per share, the largest first quarter payout in SCHD's history at the time. Q2 2026 paid $0.2525. That's a 1.7% drop quarter over quarter, compared to Q2 2025's $0.2604. That's a 3% drop year over year. Two declines in a row. That is exactly the kind of pattern that makes long-term investors nervous and exactly the kind of pattern new investors panic sell over. So here's the question that actually matters. Is SCHD broken or is something else going on? It's something else, and once you see it, you'll probably never worry about a single quarterly dip again. Every March, SCHD does something most investors never think about. It reconstitutes. The entire fund gets rebuilt from scratch based on strict rules, cash flow strength, balance sheet health, dividend yield, 5-year dividend growth. This year, effective March 23rd, 25 new stocks came in. 22 got kicked out. United Health Group, Abbott Laboratories, Procter & Gamble, and Qualcomm walked in the door. AbbVie, Cisco, Halliburton, and Valero Energy walked out. Here's the part nobody explains well. SCHD doesn't hand you a fixed check every quarter like a single stock might. It's a pass-through. It collects the dividends paid by its roughly 100 holdings, then forwards that cash to you once every 3 months, which means timing matters a lot. When 25 companies replace 22 others, those new companies don't pay their own dividends on the old company's schedule. The new holdings average yield barely moved. 3.43% versus 3.45%, practically identical. But the calendar shifted. Some of that new dividend cash simply hadn't landed inside the fund yet when Schwab calculated your Q2 check. Analysts widely point to this timing mismatch as the most likely explanation. Schwab hasn't issued an official statement confirming it, but the data lines up. Picture 10 tenants paying rent. Swap 2 of them for new tenants who pay on a different day of the month. And this month's total collected can look smaller, even though your annual rent income is still climbing. That's SCHD's Q2 in a nutshell. Now, here's the number that actually matters, the one that should replace the fear in your head. Zoom out to the trailing 12 months, and SCHD is still paying you more than it was a year ago. 14 consecutive years of dividend increases, not affected by this. A 5-year average dividend growth rate around 9.3% annually, not affected by this either. 1 quarter dipping on a timing technicality doesn't touch either streak. There's a second piece of good news buried in this reconstitution that most people are missing entirely. SCHD just cut its energy exposure by roughly 8%, down from an unusually heavy 20 to 21% of the fund. That money rotated into healthcare and technology sectors with steadier, often faster-growing dividends. Your fund just got less dependent on oil prices and more diversified. That's not a red flag. That's the fund doing exactly what it's designed to do. Let's put real dollars on this using the confirmed $0.2525 payment. Using a recent price around $32 a share, a $25,000 position works out to roughly $197 in dividend income this quarter. A $100,000 position close to $789. A $250,000 position near $1,973. Annualize that $100,000 position, and you're looking at roughly $3,100 a year from a fund that charges you 6 cents for every $100 invested. That number has grown every year for 14 straight years. This quarter's timing dip included. Quick myth to clear up while we're here, because it shows up in my comments every single quarter. Can you just buy SCHD right before the ex-dividend date, grab the payment, and sell? No. On the ex-dividend date, June 24th this quarter, SCHD share price dropped by roughly the amount of the dividend itself. You collected 25 cents, your shares are worth about 25 cents less. Even trade. In a taxable account, it actually costs you, because now you owe tax on income you never truly profited from. The dividend rewards patience, not timing tricks. And here's the bigger picture worth sitting with. SCHD's dividend has grown at roughly 9.3% a year on average over the last 5 years. At that pace, your income roughly doubles every 8 years, without adding another dollar of your own money. Compare that to a 10-year treasury paying a fixed coupon that never grows no matter how long you hold it. A rate that looks solid today can look modest in 5 years if SCHD's income keeps climbing while the treasuries stays frozen. That's the trade-off. A fixed number today or a growing number for the next decade. One timing-driven dip in one quarter doesn't change the math. So should you actually be worried? Here's the honest line. If this dividend kept shrinking quarter after quarter for a full year, that's a real warning sign, and I'd be the first to tell you. One quarter landing soft because of a mechanical reshuffle behind the scenes is not that. The 100 highest quality dividend payers in America, selected by SCHD's own strict rules, haven't changed in character, only in lineup. The real mistake here isn't holding through a soft quarter. It's reacting emotionally to one number and abandoning a strategy built to compound over decades. Here's your action item. Multiply your share count by $0.2525. That's what hit your account on June 29th. Now go back and check what you received this exact quarter last year. If this year's number is still higher, your income is still growing. Dip or no dip? Post both numbers in the comments. I want to see how many of you are still ahead year over year despite the headline drop everyone's talking about. SCHD's next ex-dividend date lands around late September 2026, with Schwab confirming the exact date closer to the announcement. That quarter will be the first one fully clear of this reconstitution's timing noise. If your drip is switched on, this quarter's payment is already buying new shares for you right now, quietly working before that next check even arrives. If this video just talked you off the ledge, or better yet, taught you something your fellow SCHD investors don't know yet, hit subscribe. I break down every dividend the moment it drops with the real reason behind it, not just the scary headlines. See you in the next one.